Sarat, always good to see you. Let's pick up where Rick left off. How worrisome is the flattening of the yield curve, at least by one of the curvaceous measures?
I mean, it's definitely an indication that we need to look at it pretty closely. It has been a very strong indicator of the past. But to Rick's point, you know, we've had a lot of manipulation in the yield curve. The Fed globally, central banks have been buying bonds. Those are rolling off. So we have to see that also work. And also, you've got a lot of, you know, as yields have gone up, you've got foreigners buying our bonds. So I think those two offsets, as we kind of see what's happening with our economic numbers, one has to watch very closely. And the other one that Tyler, we haven't really talked about is once it really starts inverting, what will the machines do? What will all the AI programs do? And that could be actually eventually an opportunity, especially if the numbers don't really represent that we are going to a recession.
So, given what you just said, as you look out over the remainder of this year, and we're almost a quarter through it, what is your thought? How is the stock market likely to react to these phenomena?
So I think part of it's been discounted already. You've seen multiples come down. You've seen the overall market multiple come down, and then you've seen, you know, what I call the hyper growth, the growth at any price stocks. They've really come down because the discount rate's going up. So I think this is kind of like the perfect storm for value stocks, companies that have cash flow, future cash flow, and are growing margins, and their balance sheets are in good order as well. So I think value is pretty strong here.
And there are some names in particular you like, Sarat. For example, Chevron. We'll talk more about energy prices in a moment, but do you think this is a space that can do well for some time?
I do. I mean, it's had a great run, but if you look at kind of where it's come from in the past, it hasn't really performed that well over the last 3 years. You've got a dividend that's over 3%. You've got a very strong balance sheet. When you look at the EBITDA for the year, it's over $31 billion. That covers their debt. And if you look at kind of where all prices are going to be, I mean, even if they come down and we solve, you know, what happens between Russia and Ukraine, oil is going to be, you know, between 70 and 90 for a long time. And at that price, companies like Chevron make a lot of money just because they're in all the different places, upstream, downstream, drilling, exploration, et cetera.
And two cheers for General Electric. It's been a long time since anybody on our air has had really kind things to say about dear old GE, our former owner.
Well, this is a total restructuring play. Larry Culp, who used to be the former CEO of Danaher, is a superstar. He's reorganized the board, is splitting the company up into three pieces. I mean, one is aviation, which is the star. The second one is going to be healthcare, and then the other one is energy and renewables. Each part is worth so much more than the total, and you're not getting any credit just because of what's going on globally, what's going on at macro level. But Larry's done a great job, and the goal is to make each three of these companies investment grade. And I think, you know, you're basically basing your analysis on Larry's ability to do this, and also the company's bottom up. They have really good products, and he spun off GCAS. He spun off a lot of kind of low-hanging fruit, and now it's execution story. The stock's in the low 90s, and I think, you know, it's a true value play in that sense.
Remind me, are they spinning the healthcare segment and spinning the power segment eventually?
Yes. So at the end of 2023, healthcare will be spun, and then in early 24, you'll get power and renewables spun off.
Will they be retaining stakes in those things? Will they be retaining stakes in those companies?
No.
So then what's left of GE then? Aviation?
Aviation services, aviation, and then as a shareholder, you'll get to decide which ones you want to own. So it's really going to be the sum of the parts. Let's just focus. You know, gone are the days of Jack Welch when we had to be a conglomerate. You get this now conglomerate discount. And, you know, other companies are doing that too. J&J spinning off their consumer division. Yeah. I think companies are really seeing that investors want to pay for what they really are.